Larry, may we start with this? This morning we got this, what I think of as extraordinary housing start numbers, a gain of nearly 17%. Now, does that suggest that the housing market is about to pick up nicely and help the economy as we go through the year?
Yes, clearly. I mean, we've had a nice sort of transition roll-up in all those housing numbers the last, I don't know, Stu, 3-4 months. A lot of it's because of lower interest rates. Mortgage rates are way down, about, I think, a full percentage point from the peaks. A lot of it is because the job numbers are strong and the income and wage numbers are strong. So people have pretty good affordability. The only issue there is, let's build more houses. I mean, people have said there's not enough inventory at the right middle-class price points. But, yes, this is going to help us on the GDP number also.
You can build more houses if the president could do something about the regulatory environment.
Well, that's right. And, by the way, we've been focusing precisely on that. Secretary Carson's been focusing on that. I and others have helped out. The president's trying to deregulate permitting, as you know, building permitting, environmental permitting, and we've just encouraged those home builders to get moving. But the economics of it are good. Incomes and wages are up, interest rates are down, and you'll see it better in the fourth quarter, and I see you're going to see a carryover right into the first quarter of 2020.
Now, our own Charlie Gasparino reported just the other day that you're thinking about tax cuts 2.0. You appeared on Fox Business and talked a little about it, but you wouldn't be specific. What we're hearing is that it might be a cut in the payroll tax and a more generous earned income tax credit. Would you be able to comment on those specifics, sir?
Well, two things quickly. This is not new news. I talked to you and others in the gaggle about Tax Cuts 2.0 going back several months. So point number one. And I am consulting. I had a very fruitful hour and a half with Kevin Brady, the once and I believe future chairman of the House Ways and Means Committee. We will be consulting with our friends in the Senate and, of course, internally, Treasury, NEC. We're all working together on this. I don't want to get specific, but I just... Look, we want to aim this at middle-class tax relief. We want to aim this at even faster economic growth going out in the president's second term. I don't want to get specific, but I feel compelled. Look, everyone, I don't know where the payroll tax cut stuff comes from. It is not high on the list. There are a number of other issues. Again, for middle-class income tax brackets, you mentioned the earned income tax credit. That is something we are looking at. We're going to certainly keep the child tax credits, the kiddie tax credits and so forth. We might want to make some things permanent, Stu, that weren't permanent, both on the individual side and also on the corporate side. I'm thinking especially of expensing, immediate expensing, which is a very powerful tonic for business investment.
But are you saying, Larry,
other things too?
Are you basically saying, look, re-elect President Trump for 4 more years and you'll get fiscal stimulus? That's it, isn't it?
Well, I would say re-elect President Trump for 4 more years and you'll get lower tax rates and lower tax burdens. You'll also get more reductions in regulation. You'll also get a continuation of the opening of the energy markets that have made us the world's largest producer. We don't need the Middle East anymore. You'll also get additional trade activity, negotiations, and trade deals that will open markets and that will end unfair trading practices by some of our so-called trading partners. I mean, look, you had this...
You talk about the Europeans and the British?
Well, yes, we will be talking to the Brits. We are talking to the Europeans. We are talking to the Japanese. We have a pretty good Japanese trade deal. The China trade deal is an historic deal, and I'm more than happy to talk about that some more. And I want to add the USMCA trade deal, which passed the Senate, I don't know, virtually unanimously or bipartisanly. By the way, USMCA, can I just pause on this? I mean, these kinds of trade deals are like tax cuts. They open markets, they lower barriers, they provide strong domestic content. On USMCA, just a sec, Stu, here's the deal. you look at the midpoint of the economic growth estimates, it will add 3/4 of a percentage point to GDP. It will add more or less 350, 375,000 new jobs per year, and probably at least $100 billion in additional direct foreign investment into the United States. And this is pro-growth, and it helps all across the board. Okay, it helps farmers, it helps manufacturing, automobiles. It also helps technology and investment. You know, in USMCA, please don't overlook the fact that this is the strongest protections for intellectual property rights. That's never been written in a deal like this before, and it is very similar. You know, on China, we had to rule out IP theft. Now we've opened the doors with our friends in Canada and Mexico to protect copyrights at all manner of IP. That is the technology heart of the American economy. That's why this is so growth. We also gain currency stability, which is a big plus, and we also increase financial services in addition to domestic content going to 75%. So I just want to emphasize the growth aspects
exactly.
of this.
But, okay, you've laid out the growth aspects from USMCA. You're talking about 3/4 of 1% added to GDP.
Yes.
That's USMCA.
That's the midpoint of the International Trade Commission range. That's where that comes
from. What about
from.
the China trade deal? You've got phase one. What does that contribute to our growth rate?
Well, we have variously estimated something like 0.5% of GDP add-on per year, and that will begin in 2020. The export numbers by themselves will be a major help, not only in the farming sector, but the manufacturing sector. You know, we've targeted $40, $50 billion of farm export, U.S. farm exports, by lowering trade barriers as well as tariffs. Let's not forget, $75 billion in U.S. manufacturing exports to China is a key part of that deal, along with $50 billion in energy and I think about $40 billion in services, mostly financial services. So, you know, back in, it's like reverse engineer. If these export transactions are completed over the next couple of years, Stu, that stimulates the farming sector, the auto sector, the equipment sector, the technology sector. It will stimulate the energy sector. Do you follow me? You back into the activity.
So is it enough?
Exports are so important. And as I've said a million times, United States exports, I don't care what area, farming, manufacturing, automobiles, technology, software, we are #1 competitive in the world. #1. And if you read the Chinese official state-run blogs, they're saying they need that. That their consumers need that. So that's why this is pro-growth, and the Canadian-Mexican deal is pro-growth.
Let me add all of this lot up. Stimulus from the China trade deal, stimulus from USMCA going forward. Do you think we can, for this current year, 2020, can we get 3% growth overall for the entire year? Can we get it?
I think we can, okay? I think Q4, by the way, is going to be better than some folks think. I think we can get 3%. I would love it if Boeing started producing and delivering airplanes, okay? So Boeing may cost us 0.5 percentage point early in 2020, this winter. We had the Boeing people in, and they're moving along very nicely, and they're working very hard, and God bless them, it's a great American company. But my answer to you is yes, I'm going to hold. Please circle the 3% growth zone. We've had improvement in monetary policy, and beside the trade deals and the monetary policy, there's some early indications. You look at some of the crackerjack Wall Street economists like Ed Hyman and some others, it looks like global PMIs, are starting to improve a little bit. So the drag from the world recession may be mitigating somewhat. So yes, I'm going to, you know me, I'm going to play this from the optimistic side. You take a number, I'm going to have the over.
Okay, I'm not. I don't do football analogies, you see, Larry. I'm not very good at that.
I'm not sure I even know what it means, but I've kind of been using it lately.
I just watched the LSU team at the White House, and that was pretty good. That's the only football I really understand. But let me move on, shall I, please? Phase 2, the China trade deal. Will talks begin immediately? Because, I mean, phase 1 is signed.
The answer is yes. The answer is essentially yes. The president talked about it with Vice Premier Liu He. We had our private luncheon after the beautiful signing ceremony 2 days ago. The answer is essentially yes. I don't think any trips have been scheduled yet, but everybody's ready to jump in. And, Stuart, I just want to make this point. The president made this point. The success of Phase 2 will depend in some large part on the success of implementing Phase 1. I think that's terribly important. And second point, the importance, President said this, I'm going to put it out, he believes Phase 1 was the heavy lift, and Phase 1 was the most important, and that Phase 2 flows from Phase 1. And I've seen people try to make Phase 1 little. They're nuts. They should make it large. This is a historical group. The scope and size of Phase 1 deals agreements between the two great powers, the United States and China. Nothing, and I mean nothing like this has ever happened before. Now, you can question whether China will live up to the agreements. That's a fair question. And we have very strong enforcement provisions in there. But I think going into that, the mood music is good. The attitudes are very positive. Phase 1 is a historic, earth-shaking deal. And that's going to get us through to Phase 2.
Do you guys ever get worried when you see the stock market go straight up? I think we've got a market that could be characterized right now as a melt-up situation. Does that make you a little nervous?
Well, look, the economy is fundamentally sound. We're posting the best growth numbers in many, many years. The jobs numbers, the unemployment decline, the absence of any inflation. So I think a sound economy is the key. You were mentioning before about the outlook for taxes in a second Trump term. I mean, just let me make this point. I think that the market, and I think men and women in business, and I think men and women who have benefited from the low unemployment rate in all these cohorts and categories, women who now lead the labor force, Hispanics, African Americans, even millennials. Look, everyone is benefiting from the Trump boom. This is a middle-class, blue-collar type boom. What you don't want to do, and this would affect the stock market negatively, you don't want to change this. You don't want to change these pro-growth policies. The president has rebuilt the economy. He's reopened the economy in every... You don't want to change this. So what I'm hearing from the other side right now is not at all hospitable either to the stock market, to the economy, or to small businessmen and women.
Sure.
So listen, I think that's a very important point in this, assuming that these things move forward. I still think the president's the overwhelming favorite to be reelected. I think people are going to be staggered. A lot of my friends who are pollsters may not see it right now, but take-home pay is soaring, and unemployment is falling, and employment and wages are rising. You're going to see new votes from a lot of different demographic sectors that we have not seen in the past. And one of my recent favorites, I love to talk about the millennials. Everybody tells me the millennials are all socialists. Well, you know what? When you're in your mid to late 20s and early 30s, which are millennials, okay, and you are working and you are developing a career, you certainly begin to understand what free enterprise is all about. Not socialism, but free enterprise. And I believe many of those young folks, they're great folks. They're embarking on the career. You and I should remember when we were in our mid-20s, you changed a lot of attitudes, and that includes voting attitudes. So I think socialism loses and Trumpian free enterprise wins. You wait and see. It's Kudlow forecast. He's going to do so much better with the young folks than people realize, and with some of the other demographic groups also.
Did you have to refer back to you and I meeting each other for the first time 50 years ago, a half-century ago, Larry? Did you have to bring that in? Yes, you did.
I'll tell you what, Stu Varney, there's nobody better in the business. I was in the business. There's nobody better in the business than you. It's a pleasure, and I mean that sincerely.
That's very kind of you, Larry. It really is appreciated. And by the way, we're celebrating our 10 years on the air We celebrate on Monday. You've been a part of this. I know you probably can't come on the show on Monday, but if you ever wanted to, if you were working that day and you just felt you wanted to get in front of a camera and, you know, brush up on your broadcasting techniques again, if you really wanted to do that, you're a guest. But Larry,
I'm in Geneva and Davos that day. So
even better. Oh,
talk
please.
to the producers and the staff. We'll see.
Good.
I'd love to help you out. You know, very few living people know that on another network, I was the Washington correspondent who used to come on at 6:30 in the morning, and you were the anchor.
Yes.
It was one of the greatest TV moments in history. And Lou Dobbs was the big boss in those days. Again, it was another network.
Yes.
And in lieu of cash, he gave me a box of cigars every now and then. It's a fabulous story. It's a long time ago. You're right. It's about 40 years ago.
You were Undersecretary at the Treasury.
I was in OMB. I was the deputy for economics at OMB. That's correct.
Okay. But I was the guy who woke you up at 5:30 in the morning and said, "Where are you, Larry? You're supposed to be in my studio." I'm sure you remember that.
I look back on that. I don't know how the heck I did
it. Larry, it was always a pleasure. Thank you for joining us. So much obliged.
Thanks
very much. Larry Kudlow, right there. Where'd he go after that?